Hey everyone, so again, it's Taylor here, and this is the interview about understanding loans for my group, the No Agents Left Behind, so that we can work on that statistic of how many agents make it versus how many agents don't make it. And just some knowledge for us new agents out there and ways that we can support our clients and kind of point them in the right direction when they're maybe talking to their lender or what they're kind of thinking for the future. So I've actually got my lender here that I use, and we've done open houses together. You know, he's great, and I know he's great, and that's why I wanted to do the interview with him, because I knew he'd have some really good material and information that we could count on. And so I have Andrew Conboy with Neo Home Loans here.
Yeah.
You want to go?
Hey, everybody. Thanks for having me, Taylor. I really appreciate it. I like to add as much value as possible to all my partners, and definitely to you, Taylor. So thanks for having me on here. Little bit of information about me, and I'm going to make this as like slow as possible, because learning a little bit about different loan types and hearing a lender talk for too long is like draining and kind of boring in a lot of ways. So I'm going to touch on some big things that I think that you really need to know being a newer realtor in the business. So little backstory about me. I've been 3 years in the business, and I'm a firm believer of, if you stand on the shoulders of giants, you can see above them. My other quote that I'm really a firm believer in is, what gets measured gets improved. So organization is kind of everything in this business, because you really need to stay on top of the changing market. And it's how saturated the market is with realtors and lenders. You have to be ahead of the curve. And so here's a couple of things that you should know just in general as far as loans. We'll talk about a couple different loan types. I work for Neo. How my company stays ahead of that changing curve is we really focused and created the bulletproof buyer. And that there's a bunch of different things we do for that. And I'm not going to get into it, but we have the Neo experience and then the Neo way, right? So like the experience is how great the experience is for the buyer. And then the Neo way is the stuff we do behind the scenes that are really awesome. And we can touch on that a different time. But what I'd like to start is, like, how do you stand out? If you ask yourself that, how do you stand out from being just another realtor out there that anybody can find online? So types of loans, moving into it, conventional. Let's talk about just a conventional loan. It's the loan that most people fall into. We try to put people into. It's the most bang for the buck. What that is it's the lowest. Being like a first-time home buyer, you can put 3% down, right? And so that's the lowest amount you can put down on any loan, aside from VA and USDA. But so out of 4 loan types, conventional is the biggest one. Okay, so that's the PMI and the rate. So you have low PMI, which that is private mortgage insurance, that you're going to have insurance on any loan type. It's going to be lower. The rate's going to be lower with conventional, with the higher credit score you have. So the only other loan type out of the 4 that I want to compare conventional to is FHA. So if you have high credit score, we're going to put you in a conventional. If you have low credit score, we're going to put you in FHA. And it's most cost effective being an FHA. If you have a lower credit score, it's better cost effective for you, just cheaper in a lot of different ways. So conventional, you're going to have that private mortgage insurance that eventually falls off once you've paid enough of the loan down. You don't have to pay insurance anymore. The bank sees you as you're no longer a risk. You're making your payments on time. You've paid enough of the loan down. We don't need to have this insurance in case you default. Yeah, and that can be as much as $300 extra a month you're paying. So that's why people put 20% down, because that's that cap. If you put 20% down, you don't have to pay PMI. So that's the biggest thing with conventional loans, because that eventually that PMI, that mortgage insurance, falls off just naturally as you pay your loan. So we want everybody to be in those conventional loans. FHA, it doesn't fall off, but you do have to pay this upfront mortgage insurance. So you have a lower credit score with FHA. It's a lot better rates with FHA. But the banks see it as such a bigger risk than that conventional. So they're going to charge you more upfront at closing. That's the biggest thing. Also, your down payment with FHA, you have to put a 3.5% down as opposed to a 3% down for conventional, right? Those are the 2 comparable ones that you're going to see most people either conventional or FHA. And that's kind of the difference between the two. It just comes down to the insurance and how the banks see how big of a risk you are. So the other two that you really need to know is starting out as a realtor is VA, right? VA and USDA. And those are the most comparable to each other because it's both 0% down. You don't have to, you can put money down, but it's as low as 0% down. For myself, I'm VA. I just sold my house, bought a house. I could have put 0 down, but I'm putting 10% down. And there's reasons for that because there's a funding fee with both products, USDA and VA. They don't have that insurance we talked about with the other two, FHA and conventional. They have their own insurance, and it comes out along with the funding fee at closing. And you can lower those funding fees different ways. But with VA, if you're disabled, you don't even have to pay that funding fee. If you aren't disabled, that funding fee goes up the more you use it. But if you do put money down, you don't have to, but if you do put money down, it lowers that funding fee, if that makes sense. So VA is really great, great set of rates. I think most lenders would agree that the VA is the best type of loan out there if you qualify for it. Just a little bit lower rates. You don't have to pay mortgage insurance, 0 money down, those kind of things. And USDA loan is the fourth loan that you should know about as a newer realtor. And it's also 0 money down. However, you only qualify in rural areas. And what that means is the closer you get to a big city, the more likely you are to not qualify. And there is a website that I'm gonna actually put in the chat. I know this is being recorded, but you can Google USDA requirements map. And it's essentially, it pulls up the entire USA and you zoom in on it, and any area in red, as circled in red, it doesn't qualify for USDA. And it's great because a lot of people want to get off the grid or kind of get it just away from cities. And if they don't have money to put down, it's a great loan type. However, it's really meant for the people who want to kind of go up into the mountains and raise llamas, or however you want to get away from society. So those are the 4 biggest loan types. I'm gonna just recap that: conventional, FHA, VA, and USDA. Know those. You don't need to know too much more than I explained to you. That's kind of like the lender's job. But those are the 4 basic loan types. I am going to touch on renovation loans because right now, with how crazy it is, a lot of people are asking about rehab loans. They're the same thing: renovation, rehab loans. Those are essentially, you buy a property for a lot cheaper and you fix up the house, and then maybe you can sell it later, or you fix it up to live in it. A lot of people are interested in that because of how expensive everything is. It's a great option. However, getting materials right now, because of everything is the shortage, right? The wood, the cost of lumber, all of these things, everything is back ordered. So everything takes a lot longer to actually build. And also renovation loans, it's a little bit tricky because you have to, in order to qualify, you have to have all your pre-planned blueprints laid out, and we have to approve everything. The bank, once you pick a company that's going to come fix all your repairs, the bank will follow them every step of the way and check in with them, make sure they're doing their job, make sure they're not cutting corners, which is good. But a lot of contractors don't like it because that's how they get paid, is if the bank approves every little thing that they do. So finding a contractor right now with how busy the market is really tough to do for a renovation loan. Still a great option, especially, things are slowing down, so it might be a little bit better. It's also a very, it's not nearly as competitive of an offer. If you're offering, that's what it is right now, how strong of an offer you can make. And if you're, offering a rehab loan, it may not get looked at is frequently. The other one I kind of want to touch on is the new construction loans. A lot of people are like, well, what is a new build like? Can be really great for a lot of reasons. However, the biggest things that you guys really need to know about construction loans is they take a lot longer to close, right? The entire process for a construction loan takes a lot longer. Buyers could be waiting a lot longer than they think. I think cabinets are in back order for 3 or 4 weeks, things like that, right? They are typically higher interest rates. There's higher property taxes as well that people don't realize. So maybe they qualify for a construction loan, they're at their limit. They don't realize they're going to spend way more in property taxes than they had planned, just because it's a new build. During construction, so as the construction is taking place over the course of months, you're making interest-only payments, and that's the only reason you're really doing that is because all the workers and the builders are getting paid how they get paid. That's where your interest payments are going. And then eventually, once the building is built, it turns into a permanent mortgage, and then you probably get put into like a conventional loan. That's kind of how a new construction loan works. So those are some different loan types. I do want to touch on down payment assistance. I feel like as a new realtor, that's something you need to know. You need to talk to your lender and who you, as you're growing your database. Like I know Washington, we'll talk about the Washington down payment. You have to take classes in order to even as a lender. I know a lot of realtors go through those classes also. And every realtor I talk to, I mention, like, because we're in Washington, Oregon, we try to get everybody to take that class because you want to give your buyers the best experience. You want to offer them the best value and what makes sense to them. And a lot of people need help. So down payment assistance is huge. So for the Washington bond program, there's an Oregon bond program, right? Like I said, you just take a class. It really helps. There's different types in the Washington bond program. There's different things, different set of rates for different things, but it's essentially, somebody with low credit scores, you get a down payment assistance. There's a different set of rates for whatever you're doing. Also, it's essentially you're taking out future equity of your house and using that as your down payment. Or you can use that towards purchasing discount points, which lowers your monthly payment. There's just different types of things you can do based on your state's bond. So that's something to ask any lender that you talk to about. And a lot of lenders don't even utilize or know about all the down payment assistance options that are out there. There's a bunch of different things, but that's why you're so encouraged to talk to different lenders and kind of hear and learn about different things. Take some notes, what you found, like, oh, I heard about this. And then a lot of, just ask around and see who's heard about it and see if it applies. Because the more knowledge you have to be able to give your clients, the better, the more value you can add to them. Oregon bond loans, we talked about like doctor programs. A lot of people don't even talk or know about doctor programs. Typically what I see with doctor programs is it can be a set of way lower rates just because they're in that field. There's also a lot of the times I see them waiving fees or even the appraisal, which is, good $800-$800. And that's huge. If you can add that, be like, hey, I know you're a doctor, here you go. Like, this is something that you should be awarded. That just makes you look better in the long run. Another thing I want to touch on, another program that's out there is Homes for Heroes. Not a lot of people understand that Homes for Heroes is amazing. 28% of all buyers are heroes. Right. And that's a firefighter, policeman, veteran, doctors, nurses, all of those people qualify. And what that is I know realtors give a chunk of their commission back. And I know that sounds a lot worse than it is. They give a little bit of their commission back to the buyer after everything's closed, just for being a hero. And the lender, if they use a Homes for Heroes lender, I think they cover, it's different per lender, but I think they cover their appraisal. But that's just something to look into, just knowing about those programs. Because what if a buyer asks you and you're like, oh, I don't know, it's worth talking about. So I have a lot of great info, documents that you can kind of look over that are, I can actually pull it up. It's, if you go to my first name, last name.com, it pulls you up to my website. And if you scroll down past the mortgage calculator, there's constantly changing documents that are uploaded that will help any of my partners or any of you guys, new realtors starting out, that are just, it's just good information to know. And I can touch on the credit score a little bit. I don't want to take too long, but this is the only thing I'm going to say about it is every lender uses these three companies. It's Experian, TransUnion, and Equifax, right? And we pulled your score from all three of those and we use your middle score. So that's where your credit score comes from. And it's a lot different than, like, a lot of people are like, why is my credit score so much higher here? But then when the lender showed me it's this, it's just the model. It's completely different. It's different than if you were going to try to go get like a loan for a small loan or a small business loan. It's just a completely different model that lenders use. So keep that in mind. Let me scroll up to, I'm going to post in the chat really quick. I need some water. Geez. This is the USDA map that you can kind of check out if you're on it. I'm also going to post this really quick. Now, if you go to andrewconboy.com, I'm going to go there myself and I'm going to read you a couple of the things that are on there that, like I said, do constantly change. But it's like great articles and things that you can post about and you can kind of engage with clients on your social media. It's all the way toward the bottom. It is stuff like what are mortgage points and how do they work? How to use your debt to your advantage, debt to income ratios. What are they? How are they calculated? How to lower yours? There's just a bunch of stuff, and we're always putting new stuff on here. It's just one of the things that my company does to add value to all new realtors, partners, clients. Just, that goes back to that question: how do you and how does your company stay ahead of the curve because it's so saturated? How do you stand out, right? And I'm going to give it back to you, Taylor.
Okay, perfect. Thanks. So I do actually have a couple questions. I've heard that some people kind of try to steer away clients from picking VA loans and that kind of stuff, just because they say that there's an issue with like low appraisers, or there's an issue with closing dates. Like I've heard that it can be like 10 days longer, or that kind of stuff. Have you seen that a lot with VA loans?
So with VA loans, it does take a little bit longer. I've noticed through my experience that getting all the paperwork, it's a little bit less strong of an offer using a VA loan. But I mean, you can have to get a rate extension, or you go past the closing date for just tons of different reasons. I wouldn't say it's more common with VA loans than any other loan. So does that answer your question?
Yeah, that works. So I know that you've been doing loans for 3 years, like you said. Are there any like weird situations that you've run into that were a big learning experience for you, or something that kind of turned how you look at loans or something?
Let's see. I have learned that communication is just everything. I've learned, I did a company merge, and I lost some buyers because I put too much trust in my processors. I had to step back in, and because at one point it's the communication, you're CC'd on everything, but you kind of let your processors take over. If they need anything while it's in underwriting, they're supposed to kind of have that constant communication. And I learned the hard way that me as a lender, I need to be in front of my clients and involved as much as possible throughout the whole experience, not just upfront, which something a lot of lenders I feel like lack is like they do that like one discovery call and then it's like, see you later, next. And that's not how it should be. And don't let anybody think, don't try not to fall into like that's what it should be, because it's not. With my company and how we do things, it's how one of the ways we stand out is we get a lot more documents up front. And typically you see like a lender, the close time is about 30 days. We get a lot more documents up front. And before we even send you a pre-approval letter, we run you through underwriting. So as soon as you get a pre-approval letter, you're already like it's already done. We can close you in less than 15 days. We literally are just waiting on the appraisal. And a lot of our branches do that in-house. So it's even quicker. I know it's all just depending on who you use and what program you have. And some clients obviously are easier than others just because of what documents they have and things. But well, that's a lot more than your question, but.
No, it's good. And then, when I first met you, you were telling me, oh, like you should talk to a bunch of other lenders, see who you want to work with, that kind of stuff. What are some good things that you think that they should look for in a lender, or they should ask their lenders when they're looking to partner with new lenders?
Definitely work. My number one is, anybody can put on a face and like, trust me, I'm the best. But like, get to know that person, because they're especially a realtor to a lender relationship. I mean, you're trusting that lender with your paycheck, right? So get to know who they are, make sure they're personable and they are treating your clients right. That's kind of basic, but also find a lender that has the heart of a teacher, that wants to teach your clients and isn't doing it just for that paycheck. Like, I know that how I've built my business, I really want clients, not only do I want to learn everything there is about the clients and their situation, but I also want to be teaching them the entire process every step of the way too, because I didn't get that throughout my experience. And so I see just incredible turnout and value in being able to step into their shoes and be like, okay, here's my suggestion. I think this is the smartest strategy we should do. Also, this is why, and here's what I've compared all my options to. Find a lender that wants to do that, not is just doing it because he has to, or, you know. So that's the biggest thing, is find somebody who's willing to teach.
Mm-hmm. Okay, and Paul, I see you've got your hand up.
Yes, ma'am. I just had a question about circle back to the VA window. I've heard that some banks, with you submit an offer, such as like Wells Fargo or some of the others, tend to take a little bit longer. Is that any information you're familiar with as well?
Mm-hmm.
Yeah, that's one of the reasons why I wouldn't even, I try to tell clients to steer away from banks. One being, I mean, banks have specific hours they're working, you know, 5 o'clock, they're done. There are people that don't come to work. There are days off. There are things where VA loans or other loans in general can take a lot longer because of that fact right there. It's just, you're working on the bank's hours. And, you know, they, like a personal loan officer and a team should be working, you know, Saturdays. If you call any one of my team members, they're going to answer at 9 o'clock at night, and just to help you out, even if it has no benefit. And that's kind of where it is. Does that answer your question? That's the best answer I could probably say when it comes to like utilizing a bank.
Yes, sir, it does.
Okay.
I have heard that before, and I was telling you that I was co-listing a house in Puyallup, and one of the offers that we got was backed by BECU, and I noticed instantly the main lister, she kind of tried to talk the clients out of picking that offer because she was saying that BECU is just hard to work with, and they're not going to be ready to close on time. And it was all that stuff where she was kind of like, I don't want to say influencing their decision, but she was like, no, like I wouldn't go with that one, even though it's a good offer, just because of who they're with.
Yeah. I mean, communication is, you need to have that lender be able to communicate all times. You know, like I just went through this entire process, and I couldn't be my own lender, so I had to like go through people and I like see what I really liked, and it was really refreshing because my experience with my lender and my realtor was great. And there was plenty of times where my wife and I were like, hey, we have these questions, even though I'm a lender, I don't know this about my own situation. Send them a text, like answer anytime. You don't really get that without the personability of like a specific broker, you know. And that's one of the things that a lender should do to add value, is not just like, everybody has different rates, everybody competes with rates, there's different ways to lower those things, but what else can you bring to the table? Like there's a table standard that all loan officers can do, but why should I pick you, right? That's the thing. And being personable, I think is huge. And constant communication and transparency is another one that I really like to build my business on.
And then I've heard that with mortgage brokers that you guys just have like more options of rates, more options of different lenders that you can use, that kind of stuff.
Yeah, that's another thing. I mean, talk to your lenders. A lot of lenders are, you know, they don't have very many options. It's like most people just try to get you into a conventional loan. And if they can't get you into a conventional loan or the other main 4 types that we talked about, they're going to probably either broker it out to a different company that can do it, but still, you know what I mean? Still kind of collect the check and still kind of be the point of contact. But so it's all dependent on which lender you end up working with, is what programs they have to offer, and you know, and where you're at, what state you're in, those things. So it's important to know those things going into it.
And then I know that you work with a good amount of realtors, and you have, you know, over the years that you've been doing it. What's something that you kind of think is a good thing for newer realtors start with, or how to like get their business going?
I would say everybody always says database, right? And I don't, sure, you don't have a database starting out, but like, so I think right now, you know, social media is thriving. And I would say like 40% of all homes and leads are coming from Zillow still. And I know Zillow took a big hit right. But aside from all of that, leads are still like, you need to have a profile, you need to have a Google profile, you need to be on Zillow, all your social media, you should be posting something. Like people need to know who you are, especially not having a database. So I would say that's the biggest thing. Also, with some of the other realtors I've talked to, I see some people like working super hard. I see others not working super hard. Like a lot of people think I'm going to be a realtor on the side, but it's tough to do that in this market right now. Like you have to put in the time, and that maybe means cold calling, but it means like you're scripting, cold calling the right people, and strategizing, staying on top of things. I like one realtor that I really like. She does complimentary staging, right? That's great. So that she has a huge business clientele base that really like the fact that she'll stage your whole house for free if you use her. Another realtor I know pays for professional photography. That's also a great perk. Like those are really good selling points that I think on top of like showing people who you are, and like if you're a Homes for Heroes advocate, that's also a great thing to like show people like, hey, like not a lot of people know about that. That's why I say like the heart of the teacher, like go to those places, this is a great to start out for realtors right here. This is a great idea. This is gold. You go to a firehouse and you say, hey, these programs exist for professionals like you. I just want you to know. Here's my business card. Here's a stack of my cards. If you have any questions, I'll walk you through it. Like that right there will start you up. And it's just getting out and doing it is the hardest part.
And then on the other side of that, what is something that you would stay away from or say is just a mistake to try or that kind of stuff?
Is for like realtors or lenders?
I mean, either realtors or, I mean, I know some realtors that become loan people, so either way, do you have something that maybe you did that was a mistake or something that someone did that you would say, I've heard about this, and I just like to get the perspective from each person I interview of a mistake they've heard of or something where they were like, I would definitely not do that again, something just to help other people.
Let's see, that's a tough question. I believe that you should talk to more than one lender. A lot of people don't want to deal with that. This whole process is such an emotional roller coaster that talking to the idea of having to have the same conversations with multiple lenders sounds terrible. But there's so much value to be added with different people that offer different things. So I guess my answer to that is just, I think the biggest mistake is jumping and sticking to one, like going to a bank and not realizing that there are other companies that will like stick with you for the next 30 years, check in on you, and also rerun all of your stuff, give you that analysis, make sure you're going to pay off. If we find another way to pay off your loan 10 years sooner than your expected 30 years. You know what I mean? Like there's so many different ways to add value, and you don't get that with a lot of other lenders because the bar is really low in this industry. So I think that's probably the biggest thing is just be open to exploring options. This shouldn't be a rushed experience in any way. I mean, it's a huge debt you're taking on as a buyer, so I guess that.
And you do hear that a lot of time in the real estate industry, as like even when new realtors are starting out that don't settle with the first brokerage you interview. A lot of people make that mistake and then they find themselves 3 months later looking for a new brokerage because it just hasn't worked out, or so I think that you can apply that in just many different situations. I mean, even like there's millions of different photographers, stagers, all that sort of stuff. Find who you work with better and that kind of stuff. And Andrew, I really appreciate you taking the time to come and talk with us and answer some questions. I do want to open it up to Nicole and Paul if you guys have any questions that you thought of while you were listening, or something you've been waiting to ask.
I don't have any questions. Thank you for the information, though.
Mm-hmm.
Yeah, I hope you got something out of it. For everybody that's listening, there's a lot of information out there and it's very overwhelming. Like I could talk your ear off about different loan products. So I hope it was kind of entertaining, just kind of hearing the basic stuff that you need to know being a newer agent, from my perspective. And, like I said, if you want to ping me a message, I'd more than happy to, I don't care where you are, I'll do that. I believe that success will come to me if I bring success to other people, especially my partners. And if I can help you in any way, just getting an understanding of some part of the business, I'll totally be on board to help you out.
Yeah, because I know you did help me out with one of the things, like I was asking questions about the VA loans, and I didn't know that there has to be, a building on the property, and there has to be water, and there has to be electricity for that kind of stuff to get approved, and that's good stuff to know.
Yeah. A lot of people inquire about land loans and, different loans. And here's the thing, all the different loan types, the rules are constantly changing too. So then it's like, what should I know? What shouldn't I know? Those 4 loan types are the biggest things for newer agents, because that's what the clients know. They've heard those things, over their life, is like, oh, conventional loan. But most people, a lot of people say like, oh yeah, 20% down, I'm pretty sure is what you need. That's like the stereotypical like mistake that, people think. But I feel like most people realize nowadays you don't need 20% to put it down. It's such a hard market all the time. How do you navigate it,
I did have a question. Do you have like a flyer or something that like to help our clients out ahead of time that would help the lender out on the back end of stuff we should get the client prepared for? Or is that something you like to personally handle on your side?
Yeah. So as far as like preparing for, this is something that's kind of unique to me. I have all my clients, everybody that I talk to, I spend an hour with in a video chat just to kind of get to know them. And I have a slideshow that we go through together. So I don't have like a specific flyer. Are you referring to like just a flyer of information of different loan types, or like I could find something for you?
Yeah, that was also going to be another question, is the breakdown of different loan types. That would be awesome. I was just thinking like, a client comes to me, let's say Taylor comes to me and I'm like, hey, you're going to need pay stubs, you're going to need this. When you talk to the lender, so just be prepared. When you talk to them, they're going to ask for these items, and it'll just help them prepare it, help them speed up the process, because they're prepared to have that stuff when they talk to the lender.
Yeah, absolutely. That's huge. I think that's a great idea, Paul. If you have something prepared in like either a digital or a physical folder that you can just present to a client and be like, this is what to expect. This is what you're going to need from a lender when you talk to them. I think that's great. I think that's gold. You're setting them up for success and preparing them for a smoother transaction. I can totally send you over. I don't have it on hand. I'll get your email and I'll send you a couple things that I think you can sort through and kind of build off of and look through to see if you can add value that way.
Yes, sir. Thank you.
Yeah, absolutely. The way we do it is at Neo. So like I said, we have a few different things that make us stand out, but one of them, with the bulletproof buyer, is being able to close in less than 15 days. And so like, we get all those documents up front. Typically you only need like 4 documents. That's like every lender's, to get pre-approved, you need like 4 things. But I'll send you all the stuff that we collect also for underwriting purposes. Yeah, I can definitely send you that, Nicole. I'll copy and paste both your emails.
I'll take one too.
Yeah, of course. Absolutely. Send you guys some stuff, and I think that would really prepare and set you guys up for talking with buyers. It's going to make you look better, having more information to present to them to prepare them better. Absolutely. And if you, like I said, once I send you guys this kind of stuff, if you have any other questions about any of that stuff, I totally don't mind digging into any resources that I have. I like to show all my clients where rates come from. Also, a lot of information, the mindsets right now of people are kind of in the wrong spot. People are like, oh, it's too crazy. It's too crazy. The rates are too high. And I like to show this chart over the last 50 years where rates have been and where they are now, right? Over the last 50 years, only 9 years have the rates been under what they are now. So that right there is a mind shift, like, whoa, catches people off guard. And then they're like, okay, rates aren't that bad. They're just fluctuating. They're just on the incline right now. They're no longer are we ever going to see those like historically low 2% rates. Not unless there's another like, pandemic. So.
What do you think when you hear all those people saying, oh, the market's going to crash? Or I've had someone actually say that they foresee a recession coming. What do you think when you hear those?
Yeah. I mean, the future is unpredictable. A lot of people believe a recession is coming. The thing is, it's not, I do believe that some form of recession will happen, but it's not going to be like the Great Depression. Everything is like, at once. Little recessions are happening right now. There's a power shock happening right now in some parts of the country, some parts of the world. So we'll see little recessions like that all over the place, but I think we're too prepared as a country to take one giant hit with our money. And that's just my opinion, but a lot of people could say otherwise. But how I operate is prepare for the worst, hope for the best, and focus on like what is going on right now, and how you can maximize your wealth over time for what's going on right now. That's where I'm at.
What do you say if you get someone that says, oh, I'm just going to wait for the market to crash, that kind of stuff? Do you get that often?
That's a huge, yeah, we get that all the time. And that you can always wait, but there's always going to be issues. There's always going to be something, there's always going to be a reason to wait even longer. Right. And there's a bunch of reasons why you shouldn't wait, even if it's a higher rate. If you take a higher rate right now and everything changes and all of a sudden rates are super low, you can always refinance, right? Whatever rate you get right now is going to be the highest rate you're going to get for the rest of the loan, because you can always refinance lower. You're never going to refinance higher. Unless you are at 2% and you want to pull a bunch of cash out right now. But so there's pros and cons in every market, and it's always going to be changing. So if you wait, it could cost you thousands of dollars in equity, right, over time. There's a lot of reasons why waiting is a bad thing to do. And I post stuff on my social media all the time about like tips and tricks. And like, I post stuff like that, articles, and on that andrewconboy.com, if you scroll all the way down to those documents, I'm sure there's something along those lines. Like this is what it could cost you if you wait. So I hope that helps.
Yeah, but no, that's good, and that's why I wanted to invite you, because we've worked together before, and we've done open houses together before. So I knew that you are that lender with the heart of a teacher, and you've taught me so much, and I knew just bringing you into the group that doing this interview, you'd be able to give us some stuff, and you taught me some stuff that I didn't know, and Paul, you asked for those papers, and then I'll be getting some of those papers, and hopefully that'll work for us in the future. And that's good stuff to know about, because I didn't know, and then that's not even something I thought about doing. Like, oh, you're not pre-approved. Well, here's a sheet of paper so you can prepare. Like that.
Yeah.
Just the list person in me, I would love that. If my realtor handed me that, I'd be like, oh, I can just check it off and be like, get my stack ready and then send it.
Yeah, I mean, people don't know the process. How many times do you really move in your life, and how many years in between? It's like you forget. And it'd be so nice if your realtor was right there, already had all of your questions answered in one packet, like ready, just prepared you, like you're ready to go without having to do anything. Before you even had to like worry about something, it was already answered by your realtor. I feel like those are the gold realtors that you should strive to be, for sure.
Mm-hmm. And that's one of the things that you brought up when you were saying, that some people think it's still the, 20% down. And before I became a realtor, that's what I was thinking. I was thinking, you put 20% down, you have to have like 6 months worth of savings before you do it, and then you start to find out that no, you can have, 3.5%, 4%, that kind of stuff. And it just changes depending on what you want, or if you're trying to do we're buying points off, that kind of stuff.
Yeah, and you're not the only one that thinks all that. That's why, as realtors, like one of the top things that I think you should really know is all of your like state down payment assistance programs, things that will help the any of your clients like win their offer or be able to just one afford, affording the house is like the first step. Being able to win and write a strong offer, win the offer, that's a whole nother thing where there's a whole nother set of training on like how to write the strongest offer. I know that's something that my company does. Also, another thing that makes us stand out with that bulletproof buyer, like I was talking about, is we have a program where my company will buy the house outright in cash to compete with cash buyers. And that way you pay my company back, but you bought the house and you're in the house, right? It's pretty impressive, the things that some lenders do and some lenders don't. And so that's why I encourage all of you guys to talk to different lenders. I tell Taylor all the time, like, I want you to talk to other lenders, because I think that when you do, you're going to realize how much value I add to you, and that's
cousin to collect.
he sends his cousins to collect. Yeah. So, I mean, that's what I encourage you guys to do. Just be prepared as possible, as organized as possible, set the buyers up for the most success with the most value you can in this market.
Yeah. What's your question, Nicole?
Hey, I have a question. When you have a buyer, a potential buyer, and they are aware that they have challenged credit and they tell you that, what's in a time frame that usually a lender would try to work with them to get them approved? Is it like after a few months, and if they can clean it up enough? But if it's more than so much amount of time, they'll just pretty much tell them, hey, maybe you need to come back way later or something. Could you just give me an idea, please?
Yeah. So to understand your question, I'm sure I'll answer it here. So for me in particular, I've come across a lot of people who just aren't qualified, right? I was talking to somebody yesterday who doesn't have the credit score. And so what I do is we build a plan. We map out, I have a bunch of different resources on how to boost your credit. I'm not a credit repair specialist. I have a couple partners that are credit repair that I throw in there, but I also have some resources myself that can boost, like the Experian. I don't know, maybe you guys have heard of that, the free Experian credit boost. That actually boosted somebody's score to 640 and brought them down to whole new separate rates. It was pretty crazy. That's a different story. But what I do for people who have lower credit scores and aren't qualified, we build a plan and set a target date, because there's a difference between, goal setters and goal doers. You really want to set a target date to achieve something. And that's what I start with clients. And then I check in with them every month, like, hey, how are you doing? Are we on track? Are we saving the X amount of money that we had originally planned? What's your credit like? Are we staying away from the credit card? Whatever we talked about a month ago. I helped some buyers that I've been talking with for a year ago. They just got into a house. So that's something that you don't see a lot of lenders do, that I take pride in, is building a credit score or some kind of plan and nurturing that relationship up until they are eligible and ready to buy. It all depends on the lender. You see a lot of lenders that my lender, when I bought my first house, like it was like a one conversation done. I've never heard from him again since. So it's really dependent on how the lenders do business. But in my opinion, if you get somebody that wants to buy a house, you do everything you can for as long as you can to help them win that house or win a house.
Thank you. That answered my question.
Cool.
So I have a
Yeah, I
question.
definitely think it depends on the lender, because I have talked to some lenders where they're like, oh, if they're less than 520, I just don't talk to them, or I just give them someone else's number and they go there. I also have a couple credit repair specialist people that I know as well, and if you want to partner with them, you also need to talk to them, because each different one will have a different rate as well, because those credit repair specialists, they do charge the person as well. Paul, what was your question?
So verification of income for a lender, how does that work as for an agent? Let's say a real estate agent wants to buy a home. How does that work for them to verify their income?
Yeah, so I mean, same rules apply. So 2 years of work history, and as far as qualifying for commission, and I know I think most realtors are like commission only. We would need 2 years of your commission. to qualify you. So if you want to buy, if you just became a real estate agent and then you've been doing really good for a year, I think some cases, it depends on all your work history and a lot of other things. I think the minimum would be like a year, but most, 9 out of 10 times we need 2 years of credit history, or I'm sorry, not credit history, work history. And like we can't take if you get one bonus, first time ever you got a bonus, we can't count that unless you've gotten it, for 2 years. Does that make sense? So it's like, and same with same rules apply for commission bonuses and tips, things like that. We need to see a sustainable breadcrumb trail that you're consistently getting it to count it towards your income. But for just qualifying for a house with the most amount of income, and I know, like, are you interested in trying to buy a house, Paul? Is that, or are you just looking for an example?
No, I've had some people ask me, that's why I'm just curious what the answer to that was. I figured it was the commission. Here's my history of how much I've pulled in the last year or two and go.
Yeah, it's an average, we'll average it per year. How much money you made in commission per year on top of like your daily, your hourly. If you don't have hourly, just a commission based job. We just need to see that it's likely to continue in the future. That's all underwriters want to see.
Sure, of course. Thank you.
Yeah, no problem. Yeah, well, thanks for all the questions, guys. This is great. I really, I want to add as much value to you guys as possible. So ask me anything. I was a little nervous at first, but I feel like I'm a little bit more collected.
That's definitely how I was the first interview. I was kind of like, I prepared like an hour beforehand. I was like, I gotta have all these questions lined up, all that stuff. And now that once I think this is like my 6th or 7th one, you start getting kind of the flow of it. And it was great that you had a whole outline. You were like, I've got this. This is what I want to talk about. I was like, perfect. I don't even have to ask you any questions. This will be great.
Yeah, I like to be organized. That's just how it's everything in this business, especially like with your CRMs and when you touch on people, like if I wouldn't be able to talk to borrowers, right, for the last year. I wouldn't be able to know their specific situation if I wasn't organized and they had their own file and kept me updated every time I talked to them on like notes to remind myself where they're at. Because that's not something that you put in like, the system and it just tells you, hey, call this person. It's time. They're qualified now. It's like, you got to work on it. Be organized. I use, I don't know if you guys have heard of the Remarkable. It's electronic notebook. That's like the best thing I've ever bought. But anyway.
I know, yeah, you showed me that, and not quite at that level where I'll be getting that, but I definitely started making, the folders on my laptop where each one's named, each person that I'm working with, that kind of stuff. And I'm definitely a note taker, so anything we talk about during our conversations, I put in those notes just so I can refer them later. I've been doing the cold calling recently, and one lady mentioned, can we talk in a week or two? My brother-in-law's in the hospital, so I have that written down that when I call her in a week or two, I'm going to ask her how her brother-in-law's doing, just so they can be like, oh, okay, they do remember. They care a little bit, even though it's only been one conversation.
Right. Yeah. So, thank you guys for having me. And just the biggest things, like I said, know those 4 loan types, and you'll occasionally hear somebody be like, what about a rehab loan? Hopefully that kind of gave you a little bit of knowledge about those. And what about a construction loan? If you hear somebody ask about a rehab loan, they're also going to ask you about a construction loan, and knowing the kind of difference between the two. And if you didn't catch everything I said, there's a lot more to each one of those loans, but I would know those 4, and you can always Google those 4. Super easy to find out information. It's pretty standard across the board with lenders. But that's all I got.
If you guys didn't hear everything he said, this is recorded and it's going to be posted in the group too, so you'll be able to rewatch it as many times as you want. I do want to thank you, Andrew, for coming and answering all our questions and preparing and having time for us. I really appreciate it, and I love working with you. That's why I had you on here, because I knew that you'd have some good information. So as long as Paul and Nicole are done with their questions, I think we can go from here.
Great. And I'll send you guys over some stuff that can hopefully add value to your guys' business, and some things that I think that really work, that I've seen like successful realtors do. So I'll send you guys over some stuff, and message me back anytime for any questions, and I'll help you out.
Okay.
Cool.
Thank you, Andrew.
No problem, guys. Have a great rest of your day. Take care.